So we all want a successful retirement. So do we go to a wealth manager or do we go to a tax expert? How about both? Warren Wealth Management. Marcus Warren joins me once again. And Marcus, before we get started on this week's questions, because you're my resource now, but first of all, you do both. And tell folks about the importance of that. If you want a successful retirement, you better know both sides of this, right?
Yeah, you really do have to know both sides of it. And a lot of people don't think about things like taxes and things of that nature when they get to transition into retirement. And that's simply because you've been told all your life to just accumulate this money and build this nest egg, and then once you retire, it's about Social Security and pulling from that nest egg, and no one thinks about taxes. And so we always want to bring that into the conversation because it's highly important.
Yep, and there are some ways to, I'm not going to say you can't completely avoid Uncle Sam and taxes, but there are ways to reduce that burden, and we'll talk about that a little bit. Okay. Topic of today, and I love this because it is so applicable right now. $1.9 trillion American Rescue Plan.
Yes.
Yeah, trillion, which I don't even know how many zeros. I can't imagine. But with that being said, what does that mean to folks who are getting ready to retire? Why is this important?
It's important simply because, just like you said, it's $1.9 trillion with the T. And when you add that up with the other COVID relief bills, it's $6 trillion that's been added to our debt just in COVID relief alone. So now we're looking at about $28 trillion of debt, and we're going to have to pay for that somehow, and it's probably going to be in the form of taxes.
Ah, there you go. See, I knew it was going to work in there to taxes some way. You're exactly right. You know, when they say, well, the government doesn't have money, the government never had money. It's our taxes. We're feeding the machine. Okay,
absolutely. Let's
talk about direct payments and stimulus checks and things like that. So how are they applicable to folks who are watching?
You know, so with this American Rescue Plan, it's providing a third round of direct payments to Americans if you qualify. So the first time it was around $1,200 per person now, and your dependents. Last time it was $600, and now this time it's $1,400 that is going into the pockets of Americans who basically qualify, and there's income thresholds for that. And so really what they're trying to do is one is get hands in the money of people who need it, and I call it kind of trickle up economics. You know, we had trickle down economics. I call it trickle up economics because you get hands into the people who need it and they tend to spend it. Hopefully they're spending it on small businesses and it gets back into the economy. Of course, we also want people to save. We've seen with the last few stimulus packages and payments that went to Americans, people started to save. Our savings rate went higher than ever. And then lastly, we've seen the stock market surge over the last year or so, even during a pandemic, because a lot of people who got those stimulus checks decided to invest it, and so we've seen that on all of those three levels, and hopefully we continue to see those.
Those stimulus checks, will they be taxed, and if so, how?
No, they are not taxed at all. So they're not taxed when when it gets into your hand. You don't have to claim it on your taxes, right. But of course we're writing a check that future generations will have to pay the tax on.
Which could involve your retirement, et cetera. Okay.
Exactly.
Child tax credits, have they changed? And what are the current laws, and what is that?
So the child tax credit, it used to be you got a child tax credit of $2,000, and now they've upped that to $3,000 if you're 6 to 17 years of age. And if you have dependents who are 6 and under, it's $3,600. So once again, it's for families who are in need, who meet some income levels, but that's more money in the pockets for people who potentially need it.
With unemployment benefits now and a lot of people needing unemployment, how will that be taxed?
Yeah, so this is interesting because this is probably the biggest one. So with unemployment benefits, they're keeping the enhanced unemployment benefits going. So it used to be $400 that you used to get a week, and now it's $300 a week, and they're extending that to September. Now, what they did from a tax perspective is it used to be that all of your unemployment benefits were taxed. And so what they did with this American Relief Plan is they are exempting the first $10,200 per individual of unemployment benefits that you received. So that right there alone is going to put more money back in the pockets of a lot of individuals. Now, if you already filed, a lot of people already filed their taxes. They already, have paid out what they had to pay in unemployment benefits taxes to the government. What they need to do is they need to go back and amend those returns so they can get some money back.
I was having a conversation with someone, and they were trying to explain to me, but I thought, okay, I've got Marcus, so I'm going to use him as a resource. You explain it so much better. So they said, yeah, as you prepare for retirement, you need to know about tax diversification.
Yes.
Tax diversification. What exactly does that mean, and how can we take advantage of that?
Yeah, that's a great question. So you always hear about asset diversification. You want some small cap stocks, large cap, U.S., international. And when they talk about tax diversification, they basically mean you need to have things that are in, we call them buckets of money, right? 3 taxable buckets. You have your taxable bucket, you have your tax-deferred bucket, and then you have your tax-free bucket. So when they're talking about tax diversification, they're talking about having money in each of those three buckets, and that's simply because when you're retired, you have a little more flexibility and control over which bucket you pull money from, and so you can control your tax benefits that way.
Oh, okay. Sadly, during this pandemic, many of us have had medical expenses and unexpected medical expenses. What are the deduction laws on that? I mean, can you take out deductions for medical expenses, and if so, how much?
Well, really, with the Tax Cuts and Jobs Act, the Trump tax plans, what they basically did is, when they raised the standard deduction up to, they basically doubled it to about $24,000. Right now, it's about $27,000 for a retired couple who's about 65. $27,000 of your standard deduction, and so that took away a lot of people's ability to write off a lot of medical expenses. But if you're able to itemize, then what you're able to do is it's basically 10% of your adjusted gross income. So if your adjusted gross income is, say, $50,000. 10% of that is $5,000. Anything above and beyond $5,000 in medical expenses is what you're able to deduct.
For folks here who love the fact, his delivery and his knowledge, we'll talk about how you can meet with Marcus one-on-one if you prefer that. But let's talk a little bit about this retirement rescue game plan that you have.
Yeah.
Okay, so how does that work, and how can folks get a hold of this information?
Yeah, so, Biden's, his COVID plan is called the American Rescue Plan, right? Ours was called the Retirement Rescue Game Plan.
Who stole from who?
And hey, I'm not saying that he stole anything from us, but it is what it is.
Okay.
But anyway, so our Retirement Rescue Game Plan, basically what it is, it's a physical packet of information that will help rescue your retirement from all the risks that threaten it. You have tax rate risk, market risk, inflation risk, and basically you're going to get a copy of my 2 books, you'll get some financial reports, and then you'll also get access to my video series entitled Retire Tax Free, which is important.
When folks are getting ready for retirement, they want to make contributions to different retirement funds. Are there limits to that, or can you put as much as you'd like into that, Marcus?
Well, it depends. In your taxable bucket, those are brokerage accounts, savings accounts, CDs. There is no limit to what you can put in that taxable bucket. Tax deferred bucket, depending on the rules, those are things like your company retirement plans, 401ks, 403bs, SEP, simple IRAs, and they have their own contribution limits ranging from $6,000 to a traditional IRA all the way up to $54,000 if you have a one-person 401k. And then you have your tax-free bucket. And if you have a Roth IRA, something like that, there are contribution limits to like a Roth IRA, which is $6,000 if you're under 50, $7,000 if you're over 50 in a Roth IRA. But you can do some conversions and move things over from that tax-deferred bucket to the tax-free bucket, so you don't have to worry about taxes when they go up in the future.
For your successful retirement, you can give them a call at Warren Wealth Management, and they'll take care of the taxes. They'll talk about retirement planning, all of that. Now, for someone who wants to meet with you one-on-one, Marcus, we talked about that option. Okay, what kind of information should they bring to a meeting with you if they get that time?
The best thing to do is when you come in is to come in with anything you have questions on. If you want to bring in your prior year tax return, your investment statements, we really get a lot of questions on what fees am I paying with my prior investments, how are they performing.
Some folks don't know, yeah.
Yes, do they have too much risk? So you bring in those investment statements, tax statements, and we can answer all those questions.
Okay, again, we'll put the information up on the screen there. It is Warren Wealth Management. He is Marcus Warren, as you can tell, great resource, very knowledgeable about not only your retirement, retirement, and you want it to be the retirement that you want, a successful retirement, but also about taxes and how they can affect your retirement. Marcus, thank you again. Great resource.
Thank you.
Love having you on. All right, coming up, another gentleman that I love having on is George Jenkins. I'm going to put him to work today. So if you have a home improvement project and you have questions, give us a call at the station here. But if you'd like to win $1,000 in home improvement project materials, you know where to go. chswindows.com. We'll be right back.